Alright, what's up, good people? It is Wednesday, February 23rd. Let's recap today's session and get prepared for the day ahead. So I gotta make it short and sweet here. Gotta do an Instagram live with my man Ashton in a few minutes here. But today's session, guys, we saw these indexes take out yesterday's low. And now we find ourselves basically at the January lows. So you got the small caps here, the futures. They break through yesterday's low today, and here you are back at the January low. The S&P 500, same position, breaks through yesterday's low, and we are right back at the January lows. I mean, like literally right back at the lows. And then the Qs here, the Qs feeling a little bit extra frisky here today. They actually make a new low. And for the last few weeks here, guys, this is kind of, this is just part of the move that we've been looking for, and that I've been discussing here in these videos. You have monthly squeezes, which are dead. They're donezo. They're gonzo. So all that crazy-ass momentum is gone. And then you start to trade under your monthly 8 EMA. Then you throw into the mix here some bearish weekly squeezes. You're under the moving average. There's no stacked EMAs. You have negative histograms. This all kind of points towards some more downside. And then throw into the mix here, at least from my personal perspective, I've got sell signals with this new indicator we're working on, basically everywhere. I got sell signals on the S&P, the QQQs, the small caps, the semiconductors, big tech, the industrials, healthcare, utilities, XLY, the financials, the real estate sector, the transportation sector. Everything's setting up here with sell signals. So as long as this is the case, and mind you, you look at the weekly squeeze here, the S&P and the Qs, just starting to wake up. The Qs haven't even fired their squeeze, or the S&P rather. S&P hasn't even fired the squeeze yet, and the QQQ, you're only 2 weeks in here. So typically we look for a squeeze that give us 5, 6, maybe 8 weeks of momentum. So I think you got more gas in the tank here to the downside. And in the event we get a pretty strong bounce, I think it's a short. I think it's a short the bounce kind of market. So here's what we've been trading for the last couple of weeks here. And these are a mix of trades that we've done in the options room, my mastery. And for those of you that did my class a few weeks ago, some of these trades are from the class. But they're all working the same game plan. So we took profits yesterday in Nike. Nike has sell signals. You have a bearish daily squeeze, negatively stacked EMAs. So it's definitely a shortable structure, but the key here is we're shorting it as close to the 21 EMA as possible. Then we're taking profits on the flush. I don't want to get short here. I want to take profits here. So next time Nike can bounce back to the 21, it's probably going to set up another short. So we took profits there yesterday. Today we took profits in Comcast. So similar structure. There's daily sell signals. There's a negative histogram. So it's a bearish daily squeeze, but we're shorting back up near the 21. That entry allows you to take nice profits on the flush here this morning. So taking profits on Nike, took some profits on Comcast, and then we got a trade here on Uber. It's all the same. Bearish daily squeeze, negative histogram, sell signals, negatively stacked DMAs, short it near the 21. And we're pretty close to taking profits on this one. So we got the Uber short, we took profits on Nike, we took profits on Comcast. We got some Uber left open. We got an IWM short. And when did we short it? When we bounced. Got a pretty good entry here back on the 10th. But the idea is you're looking for bearish structure. And this indicator I'm working on, that's going to make that part of our job super simple. If there's green arrows or white arrows, it's bullish. If there's red arrows, it's bearish. If there's no arrows, we just don't do anything with it. But your IWM has sell signals here. It basically sounds like Thanksgiving. So you short that bounce, and now we're looking for the big flush. And the IWM trade is all starting to come together pretty good here. So the max profit on the trade on my 50 contracts is about $20,000. Right now up about $5,000. And that $20,000 of profits, that starts coming in around $175. But it's a bearish structure, and we're shorting the bounce. Next trade here is Apple. and we took this in the options room yesterday. So officially today, Apple has the sell signals. We kind of front ran that yesterday, but you get your little pop yesterday morning. You're under the 21. There's no stacked DMAs. We're short in Apple here, and then all on my lonesome. So not a room trade, but I showed it Amazon a few days ago as well. So basically, guys, right, you have monthly squeezes in the indexes that are done. So that momentum source from 2020, from 2021, it's done and over with. We don't have that source of momentum anymore. Now you have weekly squeezes looking like they're going to fire to the downside. In the Amazons, in the QQQs, the S&Ps, the small caps, the Teslas, you name it, you've got weekly squeezes with no stacked DMAs, negative histograms. It all kind of points towards the potential for more downside. So if you get a good bounce this week or next week, it's a bounce. Personally, I'm looking to short. But that's what I got here for IWM. So I'll show you that on the chain here. We got a March 25th expiration, 185, 190 call credit spread. For the Apple trade that we did in the options room yesterday, over at Simpler, we got a March 18th expiration, 160, 165 credit spread. It's bringing in some decent premium. And then on my Amazon trade here, I'm out in April. And I'm selling some poor SOB a 2600 call. So pretty deep in the money spread there. That's bringing in some good profit. And then we got rid of Nike yesterday, got rid of Comcast this morning. But this is a game plan I'm trying to work here, y'all. It's, if you look at it from this perspective, right, we're trying to short, Nike on the next bounce. Well, if you look at the inverse of Nike, so just the opposite. There's stacked DMAs, there's green 10x bars, there's positive histograms. The only thing I'm trying to do here is buy every dip to the 21 EMA until it stops working. Just based on the structure. So if you take the current structure of Nike, I'm basically trying to short every bounce until it stops working. And that applies to the S&P, the Qs, the IWMs, the Amazons, Teslas, you name it. But I do want to show you a few things here. Kind of forgetting the name right now, but somebody in the options room called out the setup here earlier, which I happen to like a lot, in DraftKings. Now, why do I like it? Well, first of all, what do I want to do with it? I want to short it. Why? There's daily sell signals. And there's negatively stacked DMAs and red 10x bars on the weekly and the daily. And you got a daily squeeze, and you've also have well, for now you only got a daily squeeze. But in my book, it's a bearish structure, and that bounce today, there's your window of opportunity to short this thing. Looking for a move back down to a new low. So any potential bounce tomorrow, going to take a look at trying to do something for maybe March expiration on a short position here with DraftKings. Another interesting one, and this one comes from, I think, John, not Johnny Carter, but John, one of our members from the training room today. He called out Skyworks. And this fits the bill of a great short. You've had sell signals since Christmas time, negatively stacked DMAs, and this daily squeeze is paired with a 4-hour, 2-hour, 60-minute, 30-minute. Kind of strikes me as something here getting ready to flush to the downside. But that's the key. We're not shorting it down here. We're shorting it as close to the 21 EMA as possible. Because if this was bullish, and if you look at the inverse of Skyworks, it's certainly bullish with stacked EMAs, all that good stuff. We would want to get long as close to the 21 EMA as possible, and then take profits on that next nice push. So we're doing the same thing here, it's just the opposite direction. Because of the structure, we're going to short as close to the 21 EMA as possible, and then take profits on that flush. So Nike's a good candidate for that on the next strong bounce. I think Comcast can catch another fade. If Uber could bounce here, that's a good candidate. Names like Tesla, names like Google, Amazon. It's kind of a market-wide thing right now. But I told you I would keep it short and sweet, and I got to do exactly that. But hopefully, guys, it all makes sense. All the videos last year, all the trade reviews of, the bullish trades we're doing, it's just based on the structure of the charts. Right now, the structure and the indicator says short everything, but just pick your spots wisely. So I hope you all find this helpful. Until next time, trade safe, trade smart, and I shall talk to y'all very soon. What's up, traders? This is Taylor from Focus Trades here with simplertrading.com, and as always, I appreciate you watching our videos. If you happen to enjoy this one, go on ahead and like and comment down below, and if you're not already, make sure you go on ahead and subscribe and click that bell icon. That way, whenever Chandler and I upload a video, you'll get a notification once it's live. And if you want to watch us trade live with our own money Monday through Friday, you can check us out at simplertrading.com. See you in the next video.